Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, July 16th, 2025. So today was honestly probably one of the cleanest, most profitable days we had in the trading room, and everything that I pretty much highlighted in the morning notes came out exactly as it was that I put out. So what I had said, so yesterday we had the CPI numbers that came in, and we had a big gap up. Today we had the PPI numbers, and we had another gap up. But with the CPI yesterday, we saw the initial gap up. The high was made, I think, within the first 5 minutes, and then they just dropped it straight down. And the really, especially with IWM. So when we were having that gap up today, it was really very, very similar to what happened yesterday. And, you know, I've been doing this for over 25 years. I've seen what these market makers do. They want to keep everybody on the wrong side. If they're long, they want to push you out. They want to entrap the shorts. So what I had said is if I'm moving the chess pieces here would be my strategy. It would be gap the market up. So that's what they were doing. Hold those elevated levels for a few minutes so the bulls will start jumping in because we didn't go straight down, and then pull the rug out and take us down below far enough to break the support levels at 62.38, 62.31, and 62.27, and then finally unleash the buy algos for a sharp rally. So the low for the S&P came down at 62.20. These were these lows were. So everybody that was looking to buy these support levels just got washed out. All the bears were jumping in because they were waiting for the same exact move that we had yesterday, where I'm trying to think where the heck it is, but in any case, where we gapped up. This is it right here. We gapped up and then came down. And today we had a similar. Is that today's the 14th? So today was a little bit less of that, but the thing is, we gapped up. And we were holding the levels, and then what happened, they just pulled the rug out. So anybody that was buying here got washed out. Anybody that was thinking we were going to have the same trade as we had yesterday started shorting, found support, sucked in. It washed out all the weak bulls, got the bears trapped, and then brought it right back up again. And that's pretty much what it was. So how we did, what we did with this was we took we were basically taking strangle trades, I believe. Yeah, that's strangle trades we were. So the first one, we were using IWM, and it was trade number one. The total cost, we did the 2020 calls and the 2019 puts, and I was actually looking higher from there. I thought it was going to be a higher move, but when we started coming down some, that's when I put that trade on, and it cost about $800, and the put side alone was worth $2,200, and then when it reversed, which we closed right there because it was coming in exactly what I thought, where they were flushing people out and going to run it, and it ended up that the call side it came up. I believe it was 1,300 on just that call side there for a total trade of 3,500 on 800. Now the second trade was after we made the lows and we were coming up. And I said, buy the 218 puts, 219 calls. The puts ended up worthless, but it was $700, and the call side ended up coming up to $1,600, but it was actually $2,300 when everything was said and done, because the high of the day was 221.30. So between the two, we have $2,300, we have $3,500, we had $5,800 in gains, and with just $1,500 exposed. But we were hedged both ways, so it didn't really make a difference. So let's take a look at the S&P here. It closed up 32%. But I'm sorry, I want to go back to one more thing on here, and what I had put was the. I was looking to IWM could significantly outperform on the rebound. And if we look at IWM, that closed up 1%, and we have the S&P closed up 1/3%. So everything really in there was right, and we tested these lows here, and we came up. So we made it through the midpoint. So right now, it's it's kind of a tricky one here, because we could continue higher. It would make sense, but we've just been really coiled up in this range here. So if it breaks to the upside, we're going to have probably a move somewhere up into the 63. Like we could actually take a look here. It'd probably be somewhere, testing obviously these highs, and then if it went higher, we're probably looking at somewhere at the 63.50. But I'm kind of open ended on which way we're going to go. As I said, I look for whatever the direction is, and you can get that from the broader markets like the spiders and stuff. And if it looks like it's going to be weak, then we lean on IWM for going down and outperforming on the downside, meaning that if the S&P is down 0.5%, that will probably be down 1. So right now, the bulls are going to have to get through to 62.72. If they do that, we're probably going to pop right up to the 62.89, and then they'll be testing these highs. If they get above it, 63.24 would be the next resistance. And if we're, I'm trying to see, there's really no ABC pattern that we can use on this. So, we're just going to use the pivots right here. If the bulls get above 62.72, we're heading up to 62.90 and then to 6,300. We don't really have any buy or sell signals. If I take a look at the hourly chart, I had to reboot my computer today. So on the hourly chart, we have these bearish divergences here that, they really haven't been played out yet unless we're going to count the 24 points on the downside that we had. But even though it was 100 points from the high to the low, it ended up closing up 19. So that's not really part of working off these bearish divergences. So that's that. Let's take a look at IWM and how that outperforms. So again, this was this. I put down that the target was going to be 217.40. We ended up coming down. Once we got to the 217, I said I'm closing my trade on it because we had made over $2,000 on that, and at the lows it was worth $2,200. And on the upside, here's the 220. We end up coming all the way up to the 221.37. So again, just fantastic trades on each one of them. But the thing is that what I've been preaching is that the small caps, when we're heading higher, are going to outperform the S&P, and that's why I've been using this. Now, another thing, because I've been saying that I don't really trust the S&P just because we haven't really had any type of pullback, but I've been saying I'm not going short the market. I'm just going to use IWM. I'm going to move over to a different index, and I'm going to continue to buy and sell the AI stocks. And this is really where the day outshined was one of our stocks that I mentioned to buy right around 11 in the trade room had a massive squeeze today, up 30%. So just from getting in, I mentioned it on the 16th, I believe. It was right around here. So from there, this thing shot straight up. Anybody who got in, you're up over about 50% on it from the lows here. Now, another one that I've been talking about is the RGTIW, and that was recommended at the same time. So it was right around in this area here, I believe. And so you got in at 4. This thing went all the way up 40% today to 621. You made 50% on your money. So this is really what we've been doing, and I've been mentioning it in the premium newsletter. I give a live shot of our of my screenshot with stock charts that I put the support and resistance levels, and they make their own trades. But in the room, I actually tell them when I'm trading it and what I'm doing. And today, I did what I normally do when we get these big moves. I only took a third of it off. If we get another move up tomorrow, a big one, I'll probably take another third off and just let the other third run. And if we pull back, I'll put that back to work. But you have to, when you get these big moves, you can't just think that they're going to go straight up. Which RGTI has a chance because they have a huge short float, so that could get squeezed a lot higher. So that's why I didn't want to sell too much of the RGTIW on it, because that's the warrant, and it goes up more than what RGTI does. So again, this is our zone right here. It's pretty simple. Here's the low at 61.98. The top is, we can say 6,300, but I'm going to say it's going to be at the 62.92. If it breaks to the upside, we'd look for a move up to the 63.30, 63.76, somewhere in there. If it breaks to the downside, we're looking at a move coming down to the 61.33, and then below that 60.55. So let's see what plays out tomorrow. Have a great, if anybody's interested in joining the room, you can send me an email. It's at Gary@sentimenttiming.com, or just leave a message in the box here. And with that, have a great night, and I'll talk to you guys in the morning.